From Utah, Ms. Love is now recognized.
Thank you. Thank you, Mr. Chairman, and thanking the subcommittee ranking member, Congresswoman Moore. I have to tell you, it's been really interesting for me to listen to the testimony here today. I have a couple of questions when it comes to in regards to monetary policy. In the Federal Reserve Act of 1913 set price stability for the Fed's principal objective with regards to monetary policy. It wasn't until 65 years later, in 1975, that Congress amended the act to redefine the goals of monetary policy to include maximum employment. In the late 70s, of course, there was a period of slow economic growth and high inflation, the phenomenon that was dubbed stagflation. Is it reasonable to assert that in altering the Fed's mandate at a time where Congress was reacting to a serious but ultimately temporary circumstances was not in the best interest of the economy or the American people for the long term? And I'm interested in your thoughts about that, Mr. Allison.
I definitely think so. I think that you've given Fed somewhat conflicting goals, and I think that the belief that Fed can solve unemployment problems leads to misinvestment. I think that it's the private economy that's going to solve that because of a good regulatory environment, a good tax environment. The Fed is about price stability because money is about a medium of exchange that we can have confidence in. Mm-hmm. And when you start giving the Fed multiple objectives, I think it creates unsatisfactory outcomes. And I would argue we've had a long period of unsatisfactory, and we had much more volatility than we needed to have. I think it's wrong. It's strange to me that people don't think that we could have done better. Now, they always go back, well, how did we compare to the 1800s? You know, we don't compare buggy whips and airplanes. Is there a better solution? Is there a market-based solution that would have produced less volatility? And I think that the answer is yes. But I do think giving the Fed two goals that potentially are in conflicting makes it hard to optimize results.
You did mention in your testimony earlier today that it's not surprising that the Fed makes so many mistakes because their job is literally impossible.
It is. They can't. Economists, including liberal economists, agree that price fixing doesn't work, and that's what they're doing when they set interest rates. They're fixing prices, and therefore they're almost always wrong. They might be a little bit wrong, or they might be a lot wrong, but they can't do that job.
And I guess this would be a follow-up. Would you agree that the economy's overall performance is most optimal, and therefore its job-creating capacity maximized under the circumstance of price stability? Do you think that the overall performance of the economy's overall performance is better placed in the hands of a stable market instead of just fixing? And I guess I want to hear what your thoughts, everyone's thoughts on this issue in terms of what our job is in Congress and what the market job is versus what the Federal Reserve is involved in doing.
Well, it's interesting to me the Federal Reserve has chosen a 2% inflation target. 2% over 10 years is 20%. It's a pretty rapid inflation rate, and that they're having a problem when inflation is less than that is an interesting. To me, it's not a monetary. There's not a monetary problem there. It's a different problem. We went for long periods of time with flat or low inflation and had great economic results back in the in U.S. history. So I think that the Fed price stability helps people make better decisions. It's price uncertainty, worries about inflation, which was Dr. Goodfriend mentioned earlier, make people less willing to make investments. And worries about increased taxes to pay for expenses make people less willing to make investments.
Dr. Goodfriend, I know you haven't been asked very many questions. Do you want to chime in on this?
I agree with the last comment completely. I would like to point out that the one thing the Federal Reserve can control, the only thing the Federal Reserve can control over the longer run is the rate of inflation or the purchasing power of the currency, and I wish there was more discussion of that at this hearing. That's exactly what we need to talk about. That's why my statement focused entirely on that subject, and I would be happy to go back to that subject if you want to, but otherwise.
So quickly, yes or no? Dual mandate? Yes? No?
Well, there is no dual mandate in the sense that the only thing the Federal Reserve monetary policy has power over the longer run is one thing, and that's the purchasing power of money. So in that sense, yeah, the dual mandate is in a sense, incoherent.
Thank you.
The gentlelady's time has expired.